Welcome to another episode of The Brand Called You, a podcast and podcast show that brings you leadership lessons, knowledge, experience, and wisdom from thousands of successful individuals from around the world. I'm your host, Ashutosh Garg, and today I'm delighted and privileged to welcome a very senior and accomplished professional and entrepreneur from Vancouver, Canada, and a fellow YPO member, Mr. Brooke Wade. Brooke, welcome to the show.
Thank you, Ashutosh. It's a pleasure to be here.
Thank you. Brooke is the president of Wade Capital Corporation. He was earlier chairman and CEO of Astex Corporation. He's led several large corporations. And as I mentioned to you, he's a fellow member of the YPO. So Brooke, you've had an amazing journey as a professional and as an entrepreneur. Tell me about what did you do right to reach the very top?
Well, Ashutosh, I started off by learning what to do wrong, I think, from my mistakes.
Okay.
My first real business venture of my own or with some friends was an aviation business in Canada, flying drilling crews into the far north. And when the oil industry had a severe downturn, our market dropped by about 90% over 6 months. And we had no choice but to fold up the business. And one of the lessons I learned there was that when something happens, you always think you know immediately if it's good or bad, but you really have no idea until later. That seemed like a very, very bad time. It was extremely painful to wind up that business and sell off the assets. But it gave me some lessons, and it gave me the tools to go on to much, much bigger and better things.
Okay.
I think the main thing I learned from that was that it's very easy to sort of mislead yourself in business and lead yourself with what you hope will happen. And you really have to face reality as it is.
Correct.
It is what it is. And you have to face it exactly like that. And then you have to communicate with all the people around you in a straightforward, transparent way. So I learned that lesson in a tiny little aviation company that failed. But then I ended up applying those lessons in a very, by Canadian standards, large oil company that was in severe financial difficulty.
Right.
And I ended up becoming the vice president of finance of that company, falling back on my chartered accountant's education. And then I presented a business plan on how to hopefully turn that company around. And as a result, the president said to me, he said, "I guess your business plan is what we should have done a long time ago, but I don't have the stomach for it. So I'm going to retire. I'm going to let you be president, and you can implement your own business plan." Now, at that time, that company was 1,500 employees, owed one bank almost $1 billion. And when I became the president of that company, I was 33 years old.
Amazing.
Yeah. It was an amazing opportunity. And I think it was one of those things where it was kind of like everybody thought the ship was unavoidably sinking. So we'll get this guy to hold the wheel while we all get in the lifeboats, you know?
So when you were confronted with this opportunity of a ship that was $1 billion, president at 33, and everyone felt that there were problems, what are the 2 or 3 things that you did to start setting things right?
Well, I think the main thing that I changed was exactly what I had learned in that failure, to face reality as exactly as it is.
Okay.
And also, you have to look at things always with fresh eyes. You can't get stuck in history or in sort of certain assets being more cherished than others. In that company, the original assets of the company were very, very large, very excellent quality natural gas assets. In the old management thoughts, that could never be sold or dealt with because those were special. Those were the core. Everything else was added on.
Correct.
Myself and a bunch of other guys who were the same age as me, really, who we had put together as a very transparent team, we just came at it with a view of one of the other things I believe is that every business is nothing but a mathematical formula and people.
Okay.
So if you understand the mathematical formula that applies to a certain business, and then you look at it that way, then it becomes clear. So in looking at that, the mathematics of that business, it was very clear that the best way for us to get our financial position in shape was to sell these core assets and turn the company around. And we did that. We managed to cut the debt from about 950 million to about 400 million in a couple of years by asset sales.
Amazing.
Yeah.
Amazing.
Yeah.
And, one of the things that is often asked from me, and I'm going to ask the same question from you, is that you have had two different types of experiences. One is scaling up a business, and the other is to build new businesses. You've done both. What, in your view, are key differences in the two, when you come to people, competencies, experiences, and what you need to be mindful of?
Well, although in my experience, it may seem that they were scaling up, they were really both of them in the success period. So in the period of financial difficulty and turning things around, there you have to be action oriented, and you have to make the mathematics work. You have to figure out what's going to fix the problem, what's going to give you a positive cash flow that allows you to survive. Once you get past that, in the first case, the company was called Methanex, and it grew hugely, but it really grew through acquisition.
Okay.
And then the second company, Acetex, was completely an acquisition. It was a leveraged buyout of a French government petrochemical company. In both those cases, the acquisitions were based really on a view on timing. In every business is different. It comes back to the mathematical formula. In petrochemicals, you have these cycles, and the cycles are very important to understand, and it's very important to get the timing right. You have a situation where for a long time, cash flow is very poor, excess supply, businesses are on the bottom. And then at a time when supply becomes short, the price really of the product kind of goes to the moon, and you have all that opportunity. Right. So we used to have, that's a timing issue that doesn't exist in many businesses, but in petrochemical, being a petrochemical entrepreneur, it's key. So one of our main slogans was, timing isn't everything. Timing is the only thing.
Okay.
So it was all about timing. And part of the interesting thing we learned about that is that there's big differences between price and value. Whether you're talking about stock market or you're talking about a company's assets, obviously a company has a certain long-term value, which if you had perfect knowledge would be the sum of its kind of future expectations, right? But you don't know what that is going to be. So what happens is that when you're doing a transaction, the price is very overweighted to the recent past. So whether you're trying to finance something or whether you're trying to buy it, the price is really determined by how much cash it's produced in the last 2 years or 3 years. So if you think that's been the bottom of the cycle and that's not indicative of the future, you can buy that business at that time. And if you've got it financed correctly, you'll be strong, and you can hang in there until the price comes up, and then that's when you really make the money.
Very interesting.
So that's particular kind of to the petrochemical business, but it's similar in oil and gas. In most commodity type businesses, it's similar.
Okay.
Yeah.
Let me now move on and ask you a little bit about Wade Capital Corporation. What is the kind of work you're doing in Wade Capital?
Well, Wade Capital Corporation is really my own investment corporation.
Yeah.
It was the company that I set up to own my interest in first Methanex and then in Acetex. And since I sold Acetex, which is now almost 15 years ago, I sold it to Blackstone, into a company that they owned at that time called Celanese. Since then, I've been doing investing. And recently, I've gotten quite active in a whole new experience, which is a startup in an electrical storage device. As the world moves to electricity and stored electricity as its main source of energy, as opposed to carbon-based generators, etc., you really need a lot of storage capacity and storage flexibility to smooth out what would otherwise be very, up and down flow of electricity from wind and from solar. That's what I'm doing. Excuse me. That's what I'm doing now.
Mm-hmm.
The main thing that I think the experience I had as I transitioned to Wade Capital from Assetex, which was the operating company, is that the skills that you need as an investor are unfortunately exactly the opposite of the skills that you need as an entrepreneur.
Correct.
Not so much skills, I think attributes, because as a entrepreneur, you have to believe that just about anything is possible. You have to be optimistic and believe it's going to work out. You have to trust people and you have to get them to trust you. To be a good investor, you have to be skeptical, you have to be diligent, you have to be very careful. And it was a difficult transition. My friends joked that the only reason I didn't go broke as an investor is because I was too slow.
Well said. Well said.
Yes.
So let me then ask you a few questions about as an investor and a few things on startups. What do you look for before you decide to make an investment?
Well, you need, first of all, to have people. The people have to have drive. They have to have hunger. And they have to have integrity. And if you have people that are willing to work hard and they have integrity, then they can almost solve any problem. And if you don't have that, then you're kind of doomed from the beginning. Then the second part is what I call the mathematical formula. You need an achievable task. You need something that you can understand, that is going to be possible to execute, and that has numbers that will make a lot of value creation as you execute your plan. So if you have somebody who has an idea, an achievable idea, and you have a group of people that can do it, then you have the opportunity. Sometimes it's very hard to know whether the opportunity will work or not. But I think even more than that is the timing. And again, in this case, not timing in terms of the right time, but just how long it takes, because so many good companies that would ultimately perhaps have been a great success, things take much longer than they expect. And as a result, they run out of money. They're not able to fund that. And, a banker said to me in the middle of that financial difficulty with that oil company, this old investment, this old banker, keeping in mind that I was like 33 years old at the time, he sort of shook his finger at me like this. And he says, Brooke, always remember this. Bankers never run out of money. They only run out of confidence.
Wow.
So the important thing that you have to give your bankers and your investors is confidence, right?
Okay.
Yeah. Confidence is what makes the world go round.
Amazing. Amazing. So, I love your two words of mathematical formula and people. For a lot of the startup entrepreneurs who will be listening to our conversation, what would you say are the determinants for the right mathematical formula and the right people?
Well, I touched on people already. So you need to have people that are willing to work hard, that have integrity, that you can trust. And a lot of startups, for that reason, are based on friends and people who have worked together for a long time. I think obviously, in addition to that, depending on the particular type of startup, you need to have the technical skills. And these days, a lot of startups have huge requirements for very specific technical skills. Others don't. I think the other thing that you need is you need to be able to get to, and this sounds a little old-fashioned, but at the end of the day, you need to be able to create cash flow.
Correct.
And so you have to see a fairly short path to creating some cash flow. If you can create some positive cash flow, then you don't need to be raising money from investors all the time, and then you can be in control of your own destiny.
Correct.
And then obviously, for a business to be successful, it needs to be able to grow into a very large numbers. If you, for example, see a coffee shop can make money probably very well. But if you imagine instead a Starbucks with, thousands and thousands of that same shop, then you've got the sort of growth part of the formula.
Correct. And yet the other $1 million question, which a lot of startup founders have, is, should I raise money when it's available, or should I bootstrap as long as possible? What are your thoughts?
Well, it's a bit of a dilemma.
Yeah.
For a startup, it's truly a dilemma. And the reason the dilemma is because of the ownership. It's so easy for a person who's trying to start up a business to be diluted too much by trying to raise money too early. So I think the answer in the first case is that you have to get as far as you can in terms of determining your business plan, the idea of the business, your business people, team, etc., without spending a lot of money. But once you get going, you then have to kind of switch to the opposite. Like my slogan for operating those public companies that had lots of cyclical ups and downs in the chemical business is, when do you raise money? When you can. When you can. And also, as you can see, is what's happening in the world today. Sometimes, and I think a lot of young people haven't seen tough times yet. In easy times, when things are going very well, it's really easy to raise money. And the window is open, is what I would call that. The window's open, you can raise money. But when the world goes into recession and the financial markets go into what's called risk off, then it becomes almost impossible to raise money for a startup. So if you take that kind of a view, and if you can protect your equity to make sure you don't get too diluted, then the answer becomes kind of raise money as you can, when you can, because nobody ever went broke by raising too much money.
Correct. Well said. Yeah. Well said. Yeah. So my next question to you is that, there is a big debate going on whether the valuation of a company is determined by the stock market or by the venture capitalists, because there are companies which have got huge valuations but are making huge losses. And the founder of a unicorn recently told me that you need special skills to lose so much money and yet have such high valuations. I'd love to get your thoughts on what is more important.
Well, there's a couple of things buried in there. First of all, as a very fundamental idea, the stock of a company is a different thing completely than the company itself.
Correct.
So the stock has its own supply and demand balance. If a stock is highly sought after, or a type of business area is highly sought after, then you're going to have a shortage of stock. And as a result of that, the price is going to go up, and it could get completely out of whack with the underlying value of the business. If you're an investor in kind of industrial traditional businesses, it's very important to pay attention to that and take advantage of that. In the case of a tech business, I think what's happening there is people are betting on the long-term future of that particular area of technology. And I think in the recent times, we've had almost a feeding frenzy of too much money and not enough opportunity. So it's bid the prices up to a kind of a crazy level. I think in terms of losing money or not, I think one has to be careful to watch out for one important difference. Accounting is a very complicated thing. And I'm a chartered accountant by education, but accountant is a very complicated and contrived thing designed to match all sorts of theoretical things over time and to amortize things over time. And it's almost of no value whatsoever to an entrepreneur. An entrepreneur needs to focus on cash flow, and not on earnings. So in those companies that I had that were very successful, I didn't pay any attention to the book earnings or the profit and loss, but I had laser focus on the cash flow.
Very interesting. So I've time for two more questions for you. And my next question, I want to come back to people. And given what's happening post the pandemic, with the great resignation, the work from home, the increased number of gig workers, how does a startup founder build a team of people? Because the vintage, I mean, you and I probably are the same vintage, or I'm older. But, there's a lot of things that used to go on conversations at the coffee, management by walking around or sitting on the coffee shop and talking. Yeah. That seems to have disappeared. How does one build teams in such a situation?
Well, first of all, I confess I do not understand the Great Resignation at all. I cannot figure out where all the people went, because there were lots of people around, and then all of a sudden, there's just not enough people to go around. I think part of it is in jobs that are unpleasant and underpaid, I can understand that people somehow manage to survive through the COVID time by going back to their hometown or whatever and figuring out that they could have a better lifestyle than whatever the job was they didn't like. But in most of the things that you and I are talking about today, where you're trying to build a team to grow a business, you're not talking about unpleasant, underpaid jobs. You're talking about really skilled jobs, right? I think the absolute key in a startup is to build a team of people that you trust. So I think you have to start with a fairly small team of people that you've known, that you can rely on them, like almost like a military platoon, if you like. And then in a way that still protects the founder so he doesn't get too diluted. You've got to give those people a piece of the business. When I had Assetex, which was this leverage buyout, I made sure that every employee in the whole company was a shareholder. And the reason I did that was because then they would behave like owners. And I used to say to investors that you can drive down a highway at 100 kilometers an hour, and you can tell at a glance which homes are owned by the people or living in the people who own them, and which ones have people living in them that are renting. And you have to create a situation where people feel and act like owners. And if you do that, then you have alignment, and then you're off on the right foot.
That's fantastic. That's fantastic. And my last question to you now, Brooke, and this is for the thousands of people who will listen to our conversation. Based on your incredible journey and more recently your amazing support that you are giving to so many startups and, of course, investing your own money, what would you say are 3 lessons you would want our viewers and listeners to take away from your own journey and the amazing experience?
I think some of that is personal, some of it is business, but they come together because you only have one life, right? I think the most important one is that you have to face reality as is. I've said that earlier today. It is what it is. The second thing is, and this is something where they cross over, the real value of money is freedom. And you don't need a huge amount of money to have freedom. And you have to keep that perspective. And then the last thing in terms of setting the priorities in one's life, a lot of people who are successful in business, unfortunately, let it become too big a part of their life, right? So you can have anything you want, but you can't have everything you want. And so when you make a list and you say, these are my 5 important things, unfortunately, the only spot that matters is number 1. Right? Because you've said this is number 1, everything is second. So I think that's a bit of a trap. And I think you really have to be careful in setting your priorities and don't lose sight of the fact that at the end of the day, when you get old like you and I are, I'm sure I'm older than you, that your family and the success of your family and your children becomes the most important thing. And if you've got enough money to have freedom, which doesn't take that much, then after that, it doesn't really make any difference in your life.
Correct. So well said. And I've often told many people, that 1 more zero to my net worth will not change my life at all.
Exactly.
That's fantastic words of wisdom from you. And Brooke, on that note, and your 3 amazing pieces of advice, which is face your reality, the real value of money is freedom, and don't really make business your entire focus. If I can summarize some of the things that you said, thank you so much for speaking to me. Thank you for talking to me about your incredible journey with Assetex and all the things that you built from such a young age of 33. Thank you for speaking to me about startups, about your wonderful advice of business as mathematics and people. And thank you also for speaking to me about some of the challenges people have faced and how important they are for running all our businesses. Thank you again, and good luck to you.
Well, thank you, Ashutosh. And if this conversation we've had helps even one person, it'll be very worthwhile.
Thank you very much. It'll help many, many people. Thank you for listening to the Brand Called You videocast and podcast, a platform that brings you knowledge, experience, and wisdom of hundreds of successful individuals from around the world. Do visit our website www.tbcy.in to watch and listen to the stories of many more individuals. You can also follow us on YouTube, Facebook, Instagram, and Twitter. Just search for the brand called You.